Renisha, hi, welcome. There has been a lot of choppiness that had continued in case of the base metal space as well. Let's start with that one because the latest reweightage reports show that there has been a decline in weightage, especially in case of aluminum and zinc. How do you see that space?
With the starting of New Year 2013, base metal performed for first 2 days, but after that news of Fed finishing its QE in this year, base metals have got hammered most. Lead and zinc are the most worst performers. They have fallen around 7 to 8%. So even today I expect prices to come down, and I suggest to sell lead around 127 with the stop loss of 128. Targets 125.5 and 125 on the lower side.
Renisha, what's your sense now coming in for crude prices? Because while, as you mentioned, the first 2 days of 2013 were really euphoric, you saw everything gaining up, but crude surprisingly has kept up more sanity than the other commodities.
Yes, crude oil has getting in the momentum and has continued to perform well with the first news of US fiscal cliff deal being solved, and then there was news of QE coming to an end, and this was supportive for crude oil prices. So I expect this rally to continue, and $93.5 at NYMEX is a strong resistance. If it clears that upside, we can see 95 and 96. So I recommend to buy crude oil around 51.50 at MCX with a stop loss of 51.15, and the targets would be 5200 on higher side.
Renisha, let's talk about the precious metal space as well, and starting with gold first. We did see 4-month lows of 1625 in the previous week as well, slightly better from those kind of levels. But even as you look at the markets, there are those concerns about Fed actually cutting out or not giving out too much of a quantitative easing. There are concerns about those minutes there. Do you think that is something that would continue to put pressure here?
Yes, gold is trading directionless from last 2-3 days, and it would continue to do so for this month. I expect gold prices to trade in range of $1,600 to $1,700 in this January month until we see new news or something good physical buying coming in, and that would come from the Chinese lunar year that would start from Feb. So Jan would be a month where range-bound trading is expected, as more pressure would be on the bearish side. So I would recommend to sell gold on highs, and again dip buying could also be done. But for intraday, I expect prices to trade lower. So I recommend to sell gold around 30,920 with the stop loss of 30,970. Targets 30,830 and 800. Even I am bearish on silver today. I recommend to sell silver around 58,200 with the stop loss of 58,400. Targets 57,900 on lower side.
Renisha, latest report from JP Morgan Chase says that they are not, or they have rather stopped a call option or a buy option going in for gold prices, and they would only initiate buying once the gold prices touch 1550 on the lower side. Are you that bearish on the prices?
No, I'm not that much bearish on the prices, but short-term prices would be having some pressure on the higher side. Basically, gold is not technically looking good, and it looks like it could touch $1,600 if 1,625 is broken. I don't think 1,550 or 1,530 would be seen on cards very soon, but I expect around 1,600. That would be the lower level, and one could initiate again buying around that levels.
Renisha, as I mentioned, Dow Jones UBS Group is the first one to come out with reweightages, and they have cut aluminum weightage in their portfolio from 5.9% to 4.9%. They also have cut the zinc weightage from around 3.5% to 2.9%. These are the first two metals to take a hit there. Do you see some other commodities that could be in line, which may have performed or not performed so well, which could be getting into the firing line here?
Dow Jones rebalancing, which starts from 7th of January every year. Their strategy is generally that the commodities which haven't performed in the previous year are having more weightage, and those with the higher performance, their weightage is coming down. So this year I expect that the weightage of crude oil, Brent crude oil could increase. But otherwise, and silver is also expected to increase. But other commodities, I think we could see some downward pressure on prices when they do some reweightage.
Final question, Renisha, and while we've always had that debate on whether the silver prices will outperform gold, and that really seems to be the view going forward in 2013 as well, what's your sense if we take a full year's view, if somebody is, as an investor, does want to put in money here, what kind of a percentage returns are you expecting in the precious metal space?
I expect, yes, silver could outperform gold this year because base metals are expected to overall rally throughout the year after a small downfall. So silver could get some support from base metal prices and some from gold. So I expect that prices could touch around $35 at COMEX, and at MCX prices could touch 65,000 to 66,000 this year. So yes, if somebody sees downside price like 55,000 to 57,000, that would be a good opportunity in the buying level for the targets of 65,000 for the entire year.
All right, Renisha, I appreciate you taking time out for us. Thank you so much for joining us. So that's the view coming in from Edelweiss. Really, silver could be outperforming gold, but as far as the base metals go, well, you really have seen some declines, or rather the shorting of positions coming in for zinc and aluminum. Watch out for the short positions being created into that one.